Welcome to lecture 8 of business taxation. In this lecture we are going to understand the concept of fixed tax regime. So previously we discussed deductions. In this lecture we are going to discuss what is fixed tax regime. These are also called separate blocks. They are different, they are calculated separately from our income taxes, right? So irrespective of what our income tax is, for example, if it says that on dividend there would be 15% tax, then irrespective of whatever our taxable income is, the tax on dividend would be 15% and it would be deducted at source. So fixed tax regimes are basically block of income or separate block, or they are fixed tax rates that applies on um, different types of incomes, right? So then we would see what is tax slab and the current tax slab that is applicable, and how do we calculate tax, right? For now we have understood how do we estimate taxable income, but how do we calculate tax on that taxable income is what we are going to discuss in this lecture. And then we are going to have a look at some of the exemptions that are allowed under the income tax ordinance. So before we move towards the fixed tax regime, this is what we have discussed in our previous lecture. Although I discussed that I would show you the income tax ordinance, but I missed that in previous lecture, so I am going to show you the income tax ordinance in this lecture. So this is how the income tax ordinance looks like. It is around 700 pages of a document. So it is updated regularly. It includes all the percentages, the rules that are related to income tax. So remember, we discussed taxable income and then we saw total income, then we discussed head of incomes. And if you remember, we discussed that section 12 is related to salary. So what do we mean by section 12 is that there is a column in this income tax ordinance which gives a number to each section, and when we refer to a section we refer to that specific number of and we call that section 12. Similarly, we saw that section 60 is related to zakat. These are covered under deductible allowances. Then 60A was related to worker welfare funds, and similarly 60D was related to educational expense, and 60C was related to interest on housing scheme. This is just to show you if we wanted to understand the ordinance, then how do we find different material in that ordinance. So let's go towards the educational expense, which is at page 100 of this document, right? So it would be around 125, right? So these are deductible allowances, and the educational expense is, you can see that we we saw that the lesser of 5% of the total tuition fees, 25% of the person's taxable income, or the amount computed by multiplying 60,000 with number of children. So this is same that we have already discussed in previous lecture. I just wanted to give you an idea. One more thing that we discussed was regarding the allowed institutions, and I told you that these allowed institutions are covered in schedule 2. So normally what happens is that when this law is devised, the schedule is maintained different from the law, right? So the schedule would have different aspects of the law. For example, this list. So let me show you. So the first schedule would have different things, and then we would move towards the second schedule. Okay. So this is second schedule. We'll discuss exemptions of tax concession, It's on 436. So let me move toward this page. This would be on 436. Further down we would have this schedule 6, schedule second, and within this schedule second we need to move to 60th section, because this donation was discussed in section 60. Okay, so here we have this section 60. Sorry, it was 61. So the amount paid as donation to following institutions would be allowed as deduction. So remember, it says Shifa Fund, Fatmid Foundation, and other institutions. So whatever list is given in this Schedule 2, Section 61, would be allowed as deduction of donation. Donation paid to other institutions would not be allowed as deduction. One more thing where you can download this section is you can go to the Federal Board of Revenue's website and income tax ordinance. They have these income tax ordinance. You can always download the latest copy of this ordinance. Okay, so let us get back to our slides. So we start with fixed tax regime. The tax on dividend, if a person is filer, is 15%. So irrespective of whatever is his taxable income is, he would have to pay 15% tax. Then the tax on dividend, if not filer, is 30%. Similarly, tax on price of the price bond is 15%. Not on the price bond, but whatever the price that you get from the price bond is 15%. There are other details regarding fixed tax regimes, but this is what we mostly use. So others are normally not used in our day-to-day routine. But still, if you wanted to refer to that fixed tax regime and other aspects of that, then you can always go back to the income tax ordinance. Okay, so now we move towards income tax slab. They change from year to year, from budget to budget. For now, the income till 6 lakh rupees is exempted from income tax, right? So whoever is earning yearly 6 lakh rupees would not have to pay any income tax, although they have to pay fixed tax regimes, right? So if even a person is earning 5 lakh rupees yearly, but he is getting some dividend, then he would have to pay 15%, if he is a filer, 15% of that dividend, right? And they are deducted at source. So if any person is earning more than 6 lakh rupees per year, then there would be a 5% income tax applicable for amount exceeding 6 lakh rupees. So if someone is earning 7 lakh rupees, then the tax would not be applicable on this 7 lakh rupees, but any amount greater than 6 lakh rupees, that is 1 lakh rupees. So we would have to calculate 5% on this 1 lakh rupees, right, which is 5% tax. So this 5,000 rupees would have to be paid in a year. So any person earning between 6 lakh rupees and 12 lakh rupees, this tax rate would be applicable. This is called progressive taxation. So if the income increases, the tax slab would also increase. The percentage of tax or the amount of tax would also increase. A person whose income is greater than 12 lakh rupees but do not exceed 18 lakh rupees would pay 30,000 rupees plus 10% of the amount in excess of 12 lakh rupees. So for example, if someone is earning 13 lakh rupees per annum, so their tax would be 30,000 rupees plus 10% of amount greater than 12 lakh. So what amount is greater than 12 lakh? It is 1 lakh rupees. So 10% of this 1 lakh rupees is 10,000. So annual tax would be 40,000 for this specific person. Similarly, if income is above 18 lakh but do not exceed 25 lakh, the tax would be 90,000 plus 15% of the amount exceeding 18 lakh. These are the slabs. You can refer to them whenever you need to calculate the tax. There are some other details that I would also like to discuss. When we say income tax, right, and we are discussing the head of the salary, so when would these slabs be applicable, right? If a person's salary income is more than 50% of taxable income, then the person will be treated as salaried person. Remember, the slabs that I just discussed are for salaried person, right? They are not for business person, they are just for salaried person. And how do we define salaried person? Any person whose taxable income is more than 50%, whose salary income is more than 50% of his taxable income would be called salaried person. For example, someone earns a total income whose taxable income is 1 lakh rupees, but his salary is 60,000 rupees. So 60,000 is coming from salary and the rest amount is coming from other aspects of his income. So would he be considered salaried person or not? He would be considered a salaried person because more than 50% of his income is coming from salary head. Then we need to distinguish between resident or non-resident. Resident is someone who spends more than 120 days in Pakistan, right? So whoever is resident would have to pay tax. I repeat, resident is someone who have spent more than 120 days in Pakistan. They can be continuous or non-continuous. So for example, someone spent the whole of January in Pakistan, but then for Feb he went to abroad, but in March, April, May, June, July and August he was in Pakistan, then he would be considered as resident. Non-resident do not have to pay. There are other rules for non-resident, but they do not have to pay income tax. Remember, this 120 days was introduced in last year, that was in 2020, the budget of 2020 and 2021. Previously it was 182 days, which is approximately 6 months. So previously the rule was if someone spends more than 6 months, then income tax would be applicable. He would be called a resident, right? So all the people living abroad and they are earning, as far as they do not spend 120 days in Pakistan or more than that, they would not have to pay this tax on salary. Okay, tax exemptions for teachers and researchers. So whoever is full-time, there are tax exemptions. What exemptions means is that some amount of your salary or income is not taxable, right? So for researchers, whatever their taxable income is, 25% of that income is not taxable. So for example, if their income is 1 lakh rupees, then they would have to pay tax on 75,000 rupees. 25,000 is exempted from tax. Pension is also, let me clear this up. Pension is also exempted provided that the retired person do not work for the same organization. For example, someone got retired from army and now he is on pension from armed forces. So this pension would be exempted from taxes. Whatever amount of pension he is getting, he would not have to pay tax on that pension, except that if he is working for that same organization, right? from where he is getting the pension. If he is working from the same organization, then this amount that he is getting as a pension would be taxable. There is second rule also. If someone is getting two pensions, right? Someone joined army and then he retired from that institutions and then joined some other institutions, a government institution, and then he got retired from that specific institution. So he is having two pensions. So this higher pension would be exempted. He would not have to pay tax on this higher pension. Then there are special allowances. For example, any special allowance received to meet expenses incurred in performance of official duty would be exempted. For example, previously I discussed TA, traveling allowance. This traveling allowance is normally paid to an employee who is traveling to other city for some official task. Because he is performing this official duty, this traveling allowance would not be calculated as this would be exempted from taxable income. So he would not have to pay tax on this income. Even if he do not spend all the amount, all the allowance that he is getting on the travel, if he is spending 50% of that allowance on traveling, even then this whole traveling allowance is exempted, even if expenses are less than the allowance. Agriculture income is not taxable. Okay, so these are some of the exemptions. There is a whole chapter on exemptions in our book and in the income tax ordinance, but we have just covered the aspects that we normally have to encounter. Let's have an example and let's try to incorporate these exemptions and the tax slabs that we have discussed. So basic salary is 6,000 per month. Entertainment allowance is 28,000. Remember, if I do not write PM or per month, then it's then you need to assume that it is an yearly allowance. Commission is 25,000 rupees. Overtime payment is 47,000 rupees. Price on the price bond is 10,000. Donation to Baitul Mal is 5,000. Agriculture income is 40,000. And zakat deductions deducted is 2,000. Okay, this is another example. So I have to solve this one on the same slide. Okay, so basic salary is 6,000 per month, so yearly it would be 72,000. Then we have commission, which is 25,000. Then we have entertainment allowance, 28,000. Overtime payment, 47,000. This price on price bond is under fixed tax regime, so we do not include it over here. Donation is deductible allowance, so we would first calculate gross income and then we would deduct these deductions. Agriculture income is not taxable. Again, this zakat is a deduction, so we are done with this. So we calculate our total income or gross income. This total income would be 1,72,000 rupees. Once we have total income, we would have to less the deductions. So one of the deduction is donation to Baitul Mal. Okay, Baitul Mal is not in schedule 2, so you can go back and check it yourself, but I have already checked it. So Baitul Mal is not in schedule 2, so this deduction is not allowed. Remember, donation only donations that are made to the institutions that are in schedule 2 are allowed as deduction. So we are left with zakat. This is 2,000 rupees. So we have 1,70,000 rupees. This is our taxable income. So should we calculate some tax on this or not? No, we wouldn't have to pay any tax because this is less than 6 lakh rupees. Remember the slabs that I just showed you? The minimum is 6 lakh rupees. So if you are not earning more than 6 lakh rupees, then you do not have to pay any income tax. So now we would calculate fixed tax regime separately. So price on price bond, it is 10,000 rupees. And remember the percentage was 10%. So we would have to pay 1,500 rupees as fixed tax regime. So the total tax would be 1,500 rupees. We do not have to pay any income tax, but this would have to be paid. So the total tax amount is 1,500 rupees. Let's move to second question. Salary income is 10,55,000. Dividend income is 15,000. Price on price bond, then we have zakat that is deducted, and we have personal medical expenses, and we have been told that Mr. A is a filer. So salary income is 10,55,000. Then remember, dividend income is in fixed tax regime, price on price bond is fixed tax regime, this is deduction, and this personal medical expenses are not included because these are expenses which we have incurred on our personal health, and in previous all the regulations we haven't seen any rule that says that we need to deduct it. Okay, so our total income becomes 10,55,000 less deduction. The deduction that we have is zakat is 775. So we are left with 10,54,225, and this would become our taxable income. Taxable income means we would have to calculate tax on this income. Okay, so let's see in which tax slab this would fall. We would have to go quite way back towards the tax slabs. Okay, so our income is 10,54,000. Where would it fall? It would fall in this first category. Right, so it would fall in this first category. So we would have to calculate tax on this 10,54,000. Okay, so how do we calculate this tax? Our taxable income is 10,54,225, but remember we have to pay if it exceeds 6 lakh rupees. So the amount that exceeds 6 lakh rupees is is 4,54,225. We have to pay 5% on this amount. So the 5% on this amount would be 22,711. This would be our income tax, right? So income tax becomes 22,711. Then we would have to add fixed tax regime, tax on dividend. Tax on dividend is 15% because he is a filer. If he was non-filer, then it would have been 30%. So 15% of 15,000 would be 2250. Then price bond, tax on price bond. Remember, it is 35,000 and we have to pay 15% of 35,000, which would be 5250. So that would be 7,500. If we add this up with the income tax, so the total would become it would be 30,211. This would be our tax for the year. Okay, Mr. A is a full-time teacher. His basic salary is 1 lakh rupees per month. Medical allowance is 50,000 per month. Utility allowance is 4 lakh. Dividend is 12,000. Zakat deducted is 60,000, and Mr. A had been provided a car facility for his personal use. So the difference between this one and the other examples that we have discussed is just the idea that he's a full-time teacher and he is given a 25% relief. So basic salary is I would just write the amounts, 12 lakh rupees. Then we have medical allowance, which is 50,000 per month, so that would be 6 lakh rupees. Okay, sorry, 6 lakh. But remember, there is a rule which says that 10% of basic salary is exempted. So 10% of 12 lakh is 1,20,000. So this 1,20,000 is exempted, and we would have to pay the tax on the rest of the amount, which is 4,80,000. Then utility allowance is fully taxable, which is 4 lakh. Agriculture income is not included over here. Dividend, zakat, these are deductions or fixed tax regimes. The only thing that we are left with is the conveyance, which is 5% of this 40 lakh rupees, which would be 2 lakh rupees. So the total income would become 22,80,000. That is 22,80,000. We would have to less the deductions, which is zakat, which is 60,000. We are left with 20,000 rupees. Okay, so now we would have to calculate the tax on this. So how do we calculate the tax? First, we would have to see in which slab this would fall, right? So this is 22 lakh rupees, so this would fall in okay, you can go back and check the slab. What you would have to do is you would have to calculate the tax amount, remember. So let's just say the tax amount turns out to be 51,000. You would have to give a relaxation of 25% in this tax amount. So let's just say 25% of this 51,000, remember this 51,000 is the tax amount, is 12,000. This would become 12,750. So this 12,750 is relaxed for, because this person is a full-time teacher. So he would have to pay 51,000 minus 12,750. So the total tax he would have to pay is 38,250. Okay, that's it for now, and in next lecture we are going to discuss some other reliefs that are provided.